FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz at 722.19. Hey, we have a winner for the Bitcoin contest. I mentioned his name before. The price, all right, the pricing is very tough on Bitcoin. You look one place, it's one price. You look another place, it's another price. So all I did was try to go back in time to CoinDesk. Right? CoinDesk, I think I don't remember who owns it. The Winklevoss twins or one of them own it. And the price they had at midnight, this was actually, yeah, I'm trying to get my time straight. This is actually 9 o'clock Pacific Daylight Time, but we were going Eastern. I said that before. The price that they had was $10,538.94. I was a little bit off, shall we say, like a lot off on that. And so the price they had, $10,538.94. And we had one person, he was about, what does that come out to? About $11.06 off. I'm talking about, well, his name is Mike Redlark. And Mike, you'll be getting an email from me. So we had to pick some price somewhere. This was the best one. So anyway, congratulations, Mike. You'll be getting 40 pre-1965 U.S. quarters, and enjoy the other 5 runners-up. You were pretty close. One was at 1,000, 555, 586, 501, 500. So everybody, there were a lot of entries. We didn't quite hit 1,000. I think it was close to 700-800. But the worst one, the most inaccurate, I won't name names, he was betting that it would be worth 10 million. We had a lot of people who thought it was going to be over $100,000. And then on the other end, we had people who just didn't quite understand what the heck we were doing here. Some people had zero, but one of them, he actually believed it was going to become worth nothing. But we had a whole bunch of sub $100 guesses, and then mid thousands. Mine was 66.50. I was not even in the running. Forget about it. Anyway, John Rubino is here with us now. John, hey, maybe that guy who believes it'll go up to 1 million or 10 million, maybe he'll be right soon, because nobody seems to care about the debt anymore. I guess that problem has been fixed.
Yeah, everybody who's betting on safe haven assets going to the moon is probably going to be right based on what's happening lately. And yeah, you're right. The debt ceiling thing was for like 15 seconds a story this week. And Kerry, you and I are old enough to remember when that debt ceiling law was actually designed to embarrass governments by forcing them to explicitly ask for an increased ceiling so they could borrow more money. And now it's nothing. It's a rubber stamp. Both sides, Republicans and Democrats, raise the debt ceiling just to get it out of the way so they don't have to deal with that. And yes, $1 trillion deficits as far as the eye can see. And that's assuming Trump gets reelected and we have small government, quote unquote, Republicans in charge going forward. If they lose and the Democrats take over, then double all these numbers, So either way, the idea that debt is a bad thing has pretty much ceased to function on any part of the U.S. political spectrum. Yeah. And because it's really easy to borrow money and spend it, and it's really politically advantageous to do that. You can make people happy with borrowed money. Expect people to keep doing it. So we'll do it till it doesn't work anymore. And that's the question. When does this process stop? Because you can never really know that. For instance, if in your own personal life, if you're borrowing money on credit cards, right, and you keep getting new pre-approved card applications in your mailbox, you can keep going. Keep borrowing more money and using it to pay off your old credit cards until the cards stop coming, and then you have to stop and then your life falls apart. We don't know when that's coming, of course. You don't know when a process of accumulating debt and borrowing and spending ends necessarily, but it eventually ends. For instance, in your personal life, if you're living by maxing out a lot of new credit cards, you can keep doing that for a really long time, as long as new pre-approved credit card applications come in your mailbox every few days. You just use the new card to pay off the old cards. But as soon as the cards stop coming, then your lifestyle ends and your life falls apart. And that's going to happen at the national and global level for all of the big countries, but we just don't know when. But this is the change in attitude about debt in the U.S. is one of the big milestones on that road, because since we don't care anymore, there's no political price to borrowing. We'll just continue to borrow, and we'll see how far we can do that.
Yeah, we'll see. We will see, and we will see. At some point, the gravy train has to run out. We know that. And now, look, gold and silver up. Silver is starting to take the lead, perhaps, or at least catching up to gold. You see that the gold to silver ratio is declining. It's getting into the lower 80s. And silver right now, I guess we should quote the price. We should say the price of gold and silver. Gold's down a whopping 90 cents for today. The bid is $14.24.10. Silver is up 18 cents, $16.36 the ounce. Silver has been the performer lately here, John. When you look at it, the chart is so powerful. It's really a chart that you can see. There's lots of upward momentum. When you look at what the chart is over 10 years or over 5 years, it was this channel where in 2016 it got close to $20, and then it's been down to mid 13s. So $3 sway one way or the other, basically $3-4 sway. I mean, it's actually $7, but generally on the midline of $17, $16, it's gone up $3, gone down $3. That is a very tight channel. Finally broken, obviously. It's broken the channel, or it's getting ready to. And we're just going to see more action on it. That's my guess. The silver stocks, which were moribund, left for dead, all but left for dead, they're starting to go up. And you know what, John? The dollar went up today as well. Dollar was up 0.13, 97.29. So you have rising metal prices in the face of a rising dollar, a rising stock market, and lower interest rates. That kind of tells you everything that you need to know.
Yeah, and you can define it with one word: liquidity. Until pretty recently, the other big central banks in the world were easing, or at least not tightening, and the U.S. was tightening. And that gave us kind of a distorted picture of the monetary world here in the U.S. Gold was down here, even though it was up in most of the rest of the world, because the dollar was stronger and because we had a tightening central bank and they had easing central banks. But now that the Fed is easing, everybody's on the same page. And the world expects, it hasn't seen it yet, but it expects this torrent of liquidity out of the big central banks, which is basically a green light to buy anything. If there's going to be a ton of extra money, that extra money is going to find its way into most different parts of the global economy. So you can buy stocks, you can buy gold, you can buy gold stocks, you can buy real estate. It doesn't matter. They're all going to attract some of that liquidity, and that's what the market is digesting right now. Mm-hmm. But of course, all of these assets aren't created equal at this point in their cycles. Real estate is in bubble territory in a lot of places. Stocks also, the big tech stocks in particular got, reached valuations that are comparable to what happened in the 1990s tech stock bubble. So they're not cheap anymore. Gold and silver are very cheap, and silver is very cheap relative to gold. So the fact that they're outperforming right now shouldn't come as a big surprise just for asset allocation reasons. In other words, they're the relatively cheap asset class that's out there right now. Therefore, they have further to run and less downside risk. But the story is much bigger than that, of course, because gold and silver are the old kinds of money that governments can't make more of. And when they destroy their national currencies, they always go back to gold and silver, which means tons of capital will start flowing out of these other asset classes, real estate and bonds and stocks in particular, and into real assets like gold and silver. And you're seeing that in a lot of headlines. Look around for money manager likes gold kinds of headlines. Ray Dalio in particular just came out and said, you know what, people should have 10% of their portfolio in gold now, that's really astounding when you think that maybe 1%, if even, of total investable assets in the world are in gold. So if regular people who have stocks and bonds and real estate and cash and don't pay attention to gold see this and start thinking, okay, well, maybe I should add, 10% of my portfolio to gold or something like that. That's an astounding amount of money relative to the size of the precious metals markets. So, even a move from 1% total investable assets in gold to 2% globally would send it to the moon. It would be very hard to buy gold at that point, just because there wouldn't be any physical coins or bars left to buy after all that investment. All that investment interest was satisfied. So that's kind of what we're looking at. It's a liquidity-driven global financial system right now with gold and silver as the cheap assets, and that's why they're outperforming. And then, the silver story is so great because it's taken so long to play out. So it's one of those things where, you're incredibly thirsty. You haven't had a drink for 3 days, and you finally get a drink, and it's a great experience. And that's what silver stackers are experiencing right now. And that silver's only up a couple points, like you said. It's up, $2 or $3 from its low. In a cycle that, if it's anything like the past two cycles, will take it to $50 or more. Silver went to $50 an ounce in 1980, and then it went to $15 an ounce in 2011.
Right.
And we're starting a cycle that looks very similar to those two cycles, where there's liable to be some kind of a financial crisis followed by massive liquidity flowing from all the big central banks. So, silver could just have a huge run. And that is not to say you should mortgage your house and buy silver today, because big bull markets have huge corrections.
Oh, yes.
And you can never know whether, this month is going to go down by 20%, because that's completely possible. But over time, so basically the same advice that we've always given is still intact. Dollar cost average, buy a little bit more each month and expect the financial wind to be at your back with precious metals.
Yeah, I completely agree. We're off to Vancouver to the Sprott Resource Stock Conference, Sprott Resource Conference. If anybody's going to be in Vancouver, I'd love to hear from you. Come and say hello. I'll buy you a drink. Saw a couple of you out there in Vegas at Freedom Fest, and it was really just a lot of fun. And, well, just get back, sit back and relax and enjoy the flight. We've waited a long, long time for it. It's finally here. So I got to believe that the worm has turned, John, and we're just going to watch this whole thing unfold. And of course, the experts will be surprised, because the experts are always unexpected. The experts never expect anything. They seem to be the dumbest people in the world. They could be up there with the speculators on the Commitment of Traders report. What's the latest on that? Anything interesting? Any interesting developments?
Gary, that makes the gold story even more interesting, because you've got seasonality, which is extremely negative right now.
Yeah, the worst.
Because the Asians don't buy gold in the summer. So normally gold goes down. And you've got this Commitment of Traders report structure in the futures market being incredibly bearish. In other words, the speculators are super bullish, and they tend to be wrong at big turning points. So whenever they've been this bullish in the past decade or two, gold and silver have tanked, and gold and silver are going up in the face of those two technical negatives, which shows you the power of liquidity and geopolitical stress. We're scared of a war in the Middle East, and we're assuming all the central banks are going to start easing. So we don't care what the speculators are doing. People are just going to keep buying, at least until something happens to change people's minds.
Yeah.
But Kerry, since you mentioned the Sprott Resource Investors Conference coming up pretty soon, this is a great time to go to one of those things, because it's been pretty depressing at similar conferences for the past few years, because these little miners have been languishing. They're at 52-week lows, and nobody will finance them, and they've got this deposit, but they can't bring it online because they can't get money, or they have to dilute their stock like crazy in order to finance it.
I know.
That's different now. Now they've got people throwing money at them, I would think, since their stocks in a lot of cases have doubled or tripled.
Hey, the
just lately here.
The most popular booth at the Sprott Conference last year was the Prozac booth. You know? And the same with VRIC, the Vancouver Resource Investor Conference, and PDAC. PDAC was a little more upbeat because that was in the beginning of March and things had firmed up. But what you're describing there, the price of gold in terms of everything else, all other investment options, the relative strength has risen dramatically. I haven't seen a number on it because it's hard to find those cross investment relative strength numbers, but it wouldn't surprise me if it was in the low to mid 80s or perhaps even higher than that, John.
FSN Radio. It's all about what's next.
Trilogy Metals is a world-class developer in Alaska's Ambler mining district. The company already possesses 8 billion pounds of copper, 3 billion pounds of zinc, over 1 million gold equivalent ounces, and now over 77 million pounds of cobalt. Trilogy's Arctic project boasts an after-tax net present value of $1.4 billion with a 33% IRR. Trilogy is led by an experienced management team with proven success in discovering and developing projects in Alaska. The company is well capitalized, has no debt, and possesses strong institutional support. Trilogy trades on the New York and Toronto exchanges under the ticker symbol TMQ. To learn more, go to trilogymetals.com. That's trilogymetals.com.
The Financial Survival Network. It's all about what's next.
Well, yeah, it's been going up where other things, like for instance, equities in the U.S. are up, but they're not way up. You know, they're at or slightly above record highs, but they're not much higher than they were 6 months or a year ago.
No.
Gold and silver, or gold at least, is at a 5-year high. Everybody's bought in the last 5 years in gold. Is up.
6 years, John. 6.
Yeah.
I hate to correct you. It's 6 years.
6 years now.
6 years.
Well, you know, it was 5 years before I stopped paying attention, because that was a brutal stretch where it would go up to 1340, 1350, 1360 in the US dollars, and then get smacked back down.
Mm-hmm.
And so finally it broke through. And from a technical standpoint, that's good when it breaks through a really long-term channel. Usually that means old resistance becomes new support. And so, yeah, you know, and the gold and silver miners, when something like this happens, really take off. They go up by multiples of the underlying metals. And that's why that conference, the next conference, should be, in terms of its tone, a lot more fun than the last few, just because these guys, a lot of the guys running these companies have their life savings sunk into those companies.
The ones you want to invest with. The ones you want to invest with do. The ones that don't, you don't want to invest with.
Yes. Yeah. That's one of the things you look at. They need serious skin in the game, along with a history of success. It's really important. Rick Rule is the guy to listen to on the subject of how you separate the wheat from the chaff, just conceptually in the junior mining space. And he says, serial success is what you look for. If somebody built a big gold mine in the 70s or the 80s and sold it for a profit, then they did it in the late 90s and sold it for a profit, and they're doing it again right now, that's the guy you want to be betting on.
Very much so.
And there are people out there like that who have done it over and over again.
I'll tell you, we had on our webcast, Bill Powers and I, the gentleman who runs a small recently producing miner, Ken Berry, and it's in Arizona, so good jurisdiction, all that stuff. And I thought it was amazing that they were able to bring. It's not a district-wide deposit, but it's a real nice, respectable resource. And when I listened to his stories of what he had to go through to make that mine start producing, John, I mean, it is a tough business. It's not for the faint of heart, and it's not where you want to discover that somebody can or cannot do it after you invest the money. You want to have a good idea that when you're buying in, you're buying into prior success and the likelihood of future success. So important.
Yeah.
And Rick Rule is one of the top 10, maybe top 5 resource investors of our generation. And he's been confident since I know him, obviously not happy because it's not good for business having metals prices the way they have been. But he's been upbeat, since I got into this business 8 years ago, John. He's always been at the head of the pack. And don't worry, because this is the way it's going to work. And, the guy, he's gone through 2 or 3 resource cycles and made, zillions of dollars. But you always wonder, well, maybe Rick lost his touch. Maybe he's not right this time. Maybe this time is different, right? You always think these things. And yet here's the guy sitting pretty, Sprott, making zillions of dollars on all of the companies they've invested in for a mere pittance over the last 8 years, John.
Well, yeah, that's what those guys do. They do things that you and I can't do.
Right.
Because they'll go into a company privately and cut a deal where they help fund one of their mines or whatever, and they get some equity and they get warrants.
Correct.
Which are basically options that go way up if the stock price goes way up, and that's the kicker that really multiplies their gains. But it's kind of ungrateful to bemoan the lack of leverage in these junior mining stocks, because there's plenty of leverage there. We don't have as much around as a private investor does. Yeah. But you can still make multiples of your investment if you choose correctly. I'm looking at one now, Great Bear Resources, which has a big Canadian deposit.
Yeah, huge.
And they were 39 cents a year ago, and they closed at $4.17 today. Yep. And you see lots of things happen like that in the junior mining sector when this thing gets going. Now, it works in reverse when gold and silver are going down. Yeah, this thing was $4 a year ago, and now it's 34 cents. You see a lot of that in bad times, but in good times, they go the other way.
Yeah, reverse leverage. We see it.
Reverse leverage.
Sprott's an underwriter, securities underwriter. They are a bank, royalty bank to miners. They have opportunities every way, but that doesn't mean the rest of us can't participate. I mean, there are just such huge things happening. I mean, companies that I've had that have been moribund for years, where I even got it in a private placement, and now it's just it's almost tripled in the past 2 weeks. And it's like, what happened? And it was after they did a private placement to raise capital and diluted the stock, but their deposits are so good in great jurisdictions. Not going to mention them, but they're just an all-around good company, well managed, and have good sponsors there. And that could be one of those stocks that goes up like that. So you really need to take a look. Go onto Sprott's site, see what Sprott's invested in. Now, I'm not saying that that's a blanket endorsement for you to buy a stock. Definitely not, because they can hedge themselves. You can't. And because they're a market maker, they can have short positions balancing their long position. You just can't do that because they're pros. But normally, if they got into a stock, a company, it's because they believed in it. I mean, they definitely believed in it, or they wouldn't have done it. And they've hedged themselves, but they're going to cash in on the upside on those stocks. You can be sure of it. Smartest people in this sector, John. You and I both know it.
Yeah. Kerry, I'm going to say one more thing that
sure.
That I want to preface it by saying, okay, I'm not saying you should do this, investors listening out there, but the guys have done studies on the junior mining sector, and at the bottom of a cycle and then the turn, when everything starts going up, they conclude that the crappiest companies generate the biggest gains because they're the most beaten down. And when people come in, nobody understands the junior mining sector because nobody's in it.
Nobody, there's no analysts following the sector, John.
Yeah, so people come in and they start buying junior miners indiscriminately, and the ones that have dropped from $4 a share to 14 cents a share go to 28 cents a share right away. So they double instantly, and that's a bigger gain than a lot of the really good quality companies are making because the good ones didn't fall so far. So you end up for a period of time when it's indiscriminate, and the crappy companies go up in bigger percentage terms than the other stocks. Now, they're eventually going bankrupt, the crappy companies.
They will.
So it's not a long-term strategy. But at times like this, the shotgun approach is almost not that bad because it just gets you into stuff that you would never buy if you actually looked at their financials or their operational statistics or anything. But their stock is going to double or triple or quadruple while new money is flowing into this sector. So don't do this at home. I'm just saying it's an interesting tidbit about the junior mining sector.
And it's very spot on, John. Really spot on. That's proven fact. We're not making this stuff up. You just have to look at the studies. But that doesn't mean you should go out there looking for garbage. Hey, a couple of them as a lottery ticket, sure. But try to avoid the garbage. There's some great websites on that follow warrants really closely. It has a warrant database, guy by the name of Dudley Baker, an old friend in this business. He's got the most extensive one, and it is a worthwhile service to buy. I will tell you that. Anyway, John, that is it for today. Okay, I've asked everybody today, so I'm going to ask you, I'm going to put you on the spot. What will the price of gold be come September 30th, and the price of silver?
Oh, no idea. 3 months hence. Is that what it is? Or 2 months hence?
2 months.
Yeah, 3 months. 3 months.
2 months. 2.5.
It'll be gold will be between 800 and 10,000. But that's all I can say. Based on my past history of trying to predict prices of things.
You're pulling a Lewis Rukeyser. Yeah. The market will tend to fluctuate.
Yeah.
Right.
Yeah.
So
it'll fluctuate.
Okay, so you're just not gonna.
Well, ask me about 2025. And then I'll give you $10,000 as a prediction for gold, but and 200 for silver.
All right.
But what they do between now and then, who knows?
I think silver could be silver when it starts moving. Katie, bar the doors. It will blow past $50. Like $50 isn't even there, John. And the same with gold. It will blow past 2,000 like it didn't even exist. Anyway, that is it for today. Hey, check out John's site, dollarcollapse.com. Check out our site, financialsurvivalnetwork.com. Subscribe to both. And hey, stay tuned for next week. It's getting exciting, John.
It is indeed, Gary. Talk to you next week.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.